A lawsuit filed this week against cryptocurrency exchange Binance could lead to a major reshuffling of the cryptocurrency industry. A U.S. investor sued the U.S. subsidiary of the company, claiming it falsely marketed TerraUSD as a safe asset ahead of the so-called stablecoin's collapse in value last month, erasing billions of dollars in wealth. Stablecoins are cryptocurrency tokens like Bitcoin, but are pegged to an asset like dollars to keep them from fluctuating in price. The lawsuit also asserts Binance failed to register as an exchange. That is key to how University of Arkansas law professor Carol Goforth views the potential impact of the case.
The thing that is really interesting to me about this action against Binance is that if it succeeds, Binance and the other centralized exchanges are potentially in trouble. They will have to register as securities exchanges, an incredibly expensive and time-consuming process. So you have this very difficult, burdensome set of rules that it is going to make it very difficult for centralized platforms to continue to operate.
She sees decentralized finance, or DeFi, filling the void. These are platforms which allow users to lend, borrow, and trade digital assets, but don't play a centralized role like a traditional exchange. This would return cryptocurrency to its more freewheeling roots.
If you want to go back to that groundswell of support, that libertarian, free from government oversight, decentralized, egalitarian, I deal directly with the other person with nobody standing in my way, DeFi brings all of that back onto the table. And if we shut down the centralized marketplaces for securities, for crypto securities trading, then the only option is DeFi.
It's an interesting insight because basically, I agree with her.
Professor Gerard Comizio of the American University Washington College of Law says Binance has tried to claim it is already regulated, but thinks that won't work in this case.
Binance has made claims that they are regulated by the Treasury Department as a money transmitter by the FinCEN, and that's true, but that does not constitute comprehensive regulation of all crypto exchanges, their activities or investments.
Daniel Garrie is a lawyer who specializes in digital banking and cybersecurity and serves as a mediator in cryptocurrency disputes.
I don't think DeFi is it's different from a construct perspective than a formalized trading platform, but the very principles are that there are regulatory needs. People are putting capital to work, and there's a need to have responsibility and accountability and transparency. And I think DeFi will face the same tests if there's substantial losses and other things. I don't think I fail to see how being in DeFi will be better.
Any moves by Congress to put an overarching cryptocurrency regulatory framework in place would take precedence over a court ruling, though that could be years away. For now, Garrie hopes the collapse of Terra makes investors think twice before buying something they may not understand.
When you can click some buttons and buy it using Robinhood, and boom, or Binance, and you click some buttons, but it's really a complicated set of algorithms and trading pieces. I think this sort of drives home the complexity of holding such instruments to investors.
For Reuters Legal News, I'm Alex Cohen.